Hello, everybody. It's Paul here, and here we are, Monday, 20th of May 2019, for session 39 of the Abnormal Markets webinar series on mastering the 4Ms of trading. My name's Paul Wallace. I'm your guide. I'm a trader, analyst, and coach. As always, before we begin the main meat of our session, we all start with a quick risk disclaimer. Trading with financial instruments offered by Abnormal Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying videos for information and educational purposes only. Online educational materials are developed by Abnormal Markets and distributed by Abnormal Markets Group investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. The presentation and accompanying video should not be taken as advice for investing, as they only represent the personal opinion of the authors. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients could still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Abnormal Markets UK receive a compensation of account deficits, the maximum payout of £50,000 sterling, as per our negative balance protection policy. So, ladies and gentlemen, as always, we'd like you to consider trading with Abnormal Markets UK. They are a major global broker, and as you can see there from two of their main popular trading instruments, DAX 30 and Eurodollar, they offer very competitive spreads during the main trading hours. We also offer the MetaTrader platform in both its MT4 and MT5 guides, with also the Abnormal Markets Supreme Edition plugin. And Abnormal Markets, as I say, are a global brokerage with connections all over the world. And if you contact your account representative, they will happily guide you to using the most suitable regulatory environment for your own trading. So as always, ladies and gentlemen, I'd like to set the sessions that it's for me to sort of educate you about the 4Ms of trading so you can go away and analyze any market, be ready to trade it, and help you raise your self-awareness about managing risk and managing yourself. Yourselves, ladies and gentlemen, as always, I appreciate we have a broad range of experience here in the room. We're under time limitations of about 40-45 minutes, so that means that sometimes we're limited on the breadth and depth of topics. So we'll always try and focus on tools that you can take away and use tomorrow in your own trading endeavors. And as I'm sure we all know now by now, mastering the 4Ms of trading is about you being able to master markets, method, money, and myself. Because when a trader is in command of all of those four areas, then that is where they're in a sweet spot where they tend to trade to the best of their abilities. As always, if you want to find a deeper explanation of those 4Ms, well, you can actually go back to the sort of first couple of sessions of the Mastering the 4Ms of Trading webinar. You'll find them all in the Abnormal Markets YouTube channel or on the Abnormal Markets Global Facebook page. So what we've talked about, ladies and gentlemen, over the last few sessions is about, preparing for our trading day, okay? And we talked about, what we need to be doing for our start of day. We talked about a little bit about pre-market, and what we're going to cover in our next session is about market opening and post-market. So we'll just quickly recap on one or two of the points we touched upon on pre-market, because I always like to sort of do very, very quick recaps, because I appreciate that the more you hear it from me, the more it actually sinks in. Well, actually, what we're also going to talk about is, making sure that you're in a good position to manage yourself as a trader today, because all of this is all part of that fourth M. It's all about managing myself, and we'll touch upon that a little bit more later on. So if you remember, we talked about in terms of pre-market, well, one of the things you need to do when you target pre-market is to make sure that you check the start of every week and the start of every day to find out what economic news is coming out for that day and for that particular week. It's very important, regardless of what time frame you trade, whether you're a scalper on 1 and 5 minute charts or a position trader on daily, weekly, monthly charts. It's important to know what news is coming out that week in that particular trading session, because of course that may have an impact upon your trading plans. It doesn't take very long to do, but it's drastically important that you do, because you don't want to be sort of opening a trade just running into a big news announcement, or being on the wrong side of trade and find a market moving rapidly against you and you're not realizing why it was because there was a piece of economic news coming out. So, as we said, it's important to know the news. We talked a lot about that in terms of, you don't really have to completely understand every bit of economic news, okay? That would take a good deal of time, and there are some fantastic resources available if you want to do that, but it is important to know when that news is coming out because it'll have an impact on particular markets. So then if we talked about, what we're looking to do in terms of managing myself, it's about help improving performance. That's what we're looking to do. And, part of the way we can do that is to plan, execute, and review our trading. So, what we should be looking to do is before each trading week, before each trading day, before each trading session, should be looking to sort of plan what we're looking to achieve. We should have a good understanding of the market. We should know which method we want to use. We should actually be well on top of our money management. And, our plan is about us, as I say, managing that fourth M, managing myself. I have a plan, execute that plan, and then it's enormously important at the end of the day, the end of the week, the end of the month, the end of the quarter to review our performance, because that is actually how we get better. Slowly but surely, trade by trade, day by day. But, it's very easy to say, but I find in all my years of coaching and working traders is that a lot of people just refuse to do it. And they won't do it because they think it's too time consuming. But what I always try and stress to people is that a professional trader sees it as an investment. It's not time consuming, it's an investment in the profitability of their future business. Simply taking the time to focus on building that performance mindset could be your trading edge. You'll find that we all need trading edges, and they can be technical trading edges. Maybe it's a market edge. It could be in terms of your position sizing, but equally it could be in terms of you managing and having a good performance mindset that will help you effectively demonstrate your trading edge in markets. So remember what we were talking about in terms of preparing for our trading day. I talked about this over the last couple of weeks, and I'm very keen to stress it, is that realistically you should be prepared to be at your desk 30 to 60 minutes before the session opens. All right, we talked a few weeks ago about don't be like the dude out of the film The Big Lebowski, just thinking you can rock up 2 minutes before the market opens in your dressing gown and then suddenly trade fantastically well. And I stress it every time. All right, this is your trading business, ladies and gentlemen. Take it seriously. Show the market some respect. Show your trading some respect. Show your capital some respect. Most of us have had to, generate trading capital out of other endeavors, whether it be a job or whether it be a side hustle, maybe another business. We need to treat that with respect, okay? Treat that with respect and be prepared to do the best we possibly can. So if you remember also, ladies and gentlemen, what we talked about last week, I think was, here's an exercise for you in terms of, pre-market, understanding what type of trader you are, because once you realize what type of trader you are, you're in a position to effectively find your niche, all right, to effectively tweak and refine your trading approach in order to give yourself the best opportunity to be the best possible trader you can be. And we've talked about quite a few of these elements over the series, okay, in terms of whether you're a greed-based versus a fear-based trader. Understanding how you trade, whether it be technically versus fundamentally versus sentiment versus impulse, whether you're particularly prepared to trade trends or reversals, or whether you look to trade bounces or breakouts. We talked about, whether you're trading to learn or whether you're trading to earn, and to understand the difference between them. And if you are trading to earn, are you trading for growth or are you actually trading for income? Looking also at, are you looking to trade your position size, maybe end of day versus intraday, or understanding what type of trader are you? Some people like to scale into positions, some like to scale out. Do you actually know which type of trader you are? Some people like to trade in your mechanical systems, other people like to trade discretionary. And that's a big subject matter in itself. And and finally, are you an impulsive trader versus a perfectionist trader? Okay, I know for myself, I'm a little bit of a perfectionist trader, right? I like to have precision in my trade setups. Excuse me. And that is what makes me happy. But actually, excuse me, by understanding these and knowing them and actually getting to know who you are as a trader, that is what allows you to have the best possible opportunity to be the best trader you can be. So, in terms of understanding, we've talked about, understanding what type of trader you are. I want to talk a little bit today about, what you can do to help manage yourself further, what you can do to improve your performance, what you can do to help yourself, develop real good, strong trading behaviors. And I saw this quote here from my own sort of, let's call him my own professional hero in the sense of, one of my favorite traders, Mr. Paul Tudor Jones. If you don't know who he is, then you can read the book Market Wizards, and he's in there. It's well worth reading. There's plenty of interviews with him on social media and such these days that you can sort of find out about him. But he came out with this great line here: profits come from happiness, not the other way round. So now I spend my days making myself as happy as possible. And at first I didn't really fully understand that when I was started out as a trader, but as I've traded for longer times, I realized that actually is, unbelievably important. That fourth M about managing myself is crucially important, ladies and gentlemen, okay? Profits come from happiness, not the other way round. So it's about putting yourself in a good space, when you sit down to trade. So that is actually more likely to have, a bigger impact on your performance than chasing the sort of the latest particular trading strategy. And what I was going to do is talk about a couple of things that you can do to help you put yourself in a happier, better state as a trader, because that over time will have a bigger impact upon your trading performance. And part of it is because of this. This is a cartoon from the 1970s, all right, and especially for intraday traders where things happen very, very fast and the feedback loop is pretty quick. It's important, in terms of knowing, what type of trader you are. It's also important to know your enemy. And as this cartoon, sort of succinctly explains, the pogo cartoon, we have met the enemy and he is us. And what I mean by that is that, traders, we have the ability to make more mistakes and do, more harm to ourselves than anything that the market may do. New traders might like to blame the market, but the reality is that, most of that is, we have to take ownership and take full responsibility for the decision making that we've gone through in an effort to realize our best trading self. But it is important to basically, we've met the enemy and he is us. And it's about, important to know, we all have our strengths. We all have our weaknesses. Okay, none of us escape that. It is about the sort of, as the film title, the good, the bad, and the ugly within us. We all have that. We're just humans. Okay, we're humans. We're trying to do our best. Okay, but what we can do is, understanding, okay, the sort of our strengths, but also understanding what our weaknesses are. That can actually help us, sort of change our behaviors as traders, but also I think you'll find also as human beings themselves. So, in terms of what you can do to help yourself with, sort of improving and managing yourself and getting better, well, what we also talk about is, invariably trying to help get yourself a mentor. Everybody needs a Yoda, all right? Everybody needs a Mr. Miyagi, for those of us who watched the Karate Kid movies in the 1980s, or even the Star Wars movies in the 1980s. The truth is, everybody needs one, all right? Everybody needs one. What you actually find is most people, when they start out in any kind of endeavor, they are unconsciously incompetent. Okay, they don't even know that they're making mistakes. But as time goes on, then they become consciously incompetent. They realize they're making mistakes, and they actually, they know they need to change something to improve their ability to deliver. What they're looking to do is to strive towards a place called being consciously competent, all right, where you can actually, that you're doing the right thing and you're putting in a good performance. But the move from conscious incompetence to conscious competence, that rarely happens without us having a mentor of some sort, all right? Now, that within the trading world, that is actually a very, very broad, wide range of opportunities. Yes, you can actually have a paid mentor, but actually what you'll also find is that there are these days lots of opportunities to meet trading buddies. Okay, there are lots of trading boards. There's lots of trading meetups all over the globe that you can actually go and find people who who are just a little bit further down the path on your own journey, and invariably help you guide you along the way and sort of help you sort of avoid some of the pitfalls that happen to us all. So, I'm not suggesting that you have to have let's say a formal relationship with a mentor, but being around other traders who are ahead of you and who have the ability to sort of guide you will help you manage yourself. Okay, will help you shorten your learning curve. Now, very often what people say is, I hear them talk about, well, I should get a mentor, Paul, but it's a little bit like We all know that we should sleep more. We all know we should exercise more. We all know we should watch less TV. We all know we should eat more fruit and veg and drink less wine. But we all know these, but invariably we still do some or all of those things. And invariably, it's actually having a mentor who will hold you accountable, okay? Will hold you responsible for your actions and behavior. And that really is what can be the big difference for many traders. Remember, if you're a private trader, you get the opportunity, a fantastic opportunity to basically trade, any instrument you want in any time frame or time zone that you particularly wish and desire. So, you're operating in an environment without any particular rules or boundaries, and it's very easy to sort of how can we say, sort of stray from the ranch, okay? Go off the beaten path a little bit. And actually having a mentor can help just guide you back towards being in the right thing. Just hold you accountable, make sure you're doing the right things day after day, session after session. And as I said, a good mentor should help you develop your own style, about understanding your own trading style, and a good mentor should help you stop making from a bit of a trading or a fashion faux pas. And I put this question up because, or I put this slide up because, when I do presentations at conferences, there might be 100 people in a room, and what might happen is they may all trade the same way. They may all be intraday traders, maybe they're all end of day traders, maybe they're all FX traders, okay? But even within that, okay, everybody trades the markets a little bit differently. And it's a little bit like fashion, okay? There are principles, okay, that we follow in terms of fashion. When I look at people in a room of 100 people, everybody's wearing shoes, everybody's wearing trousers, everybody's wearing a top. However, everybody's shoes, trousers, and top are all very different because they all have their own style. And as we well know, ladies and gentlemen, there are some people more stylish than others. And it's not for me to sort of make commentary on people's fashion choices. But in terms of trading choices, it is about developing your own trading style. And that exercise earlier on about knowing what type of trader you are and actually having a good working relationship with a mentor helps you to develop your own style. We're all different, and it is about finding a way to trade within, in line with your own character, personality, and beliefs, because that is where your best chance of success will come. Apologies. So one of the next elements that we can look at in helping manage yourself, which might actually sound very, very different, might sound a little bit strange, is that actually what I suggest traders to help manage themselves is actually to indulge in an element of volunteering, so actually to go out and give back something to your community. And it's actually much, much more valuable than you realize. As I said before, that we have the opportunity to trade anywhere in the world at any time, in any kind of location, in any kind of way or size, and it's a fantastic opportunity. And sometimes maybe we take that for granted a little bit. But what I find, and I do it myself, is that by actually volunteering, by actually contributing to causes that I believe in, whether it be through either time or through being able to give money from my trading profits, well, then I find that unbelievably superb in helping me manage myself and helping me keep myself in a good space, keeping myself in that happy space where profits come from. Because what you find is, when you go out and volunteer, it gives you perspective, okay? It makes you realize that you're very, very fortunate to be able to be a trader. It provides connection because even if you're an introvert, okay, trading is quite a lonesome endeavor, right? You're sitting there at home or in your office, okay, and you're trading away. And we are actually all social animals, and it is important for us to be able to have that connection with other people. Finally, there is an element of gratitude. Okay, as gratitude, it makes you force yourself to be grateful actually for having such a wonderful opportunity compared to, let's say, other people who are less fortunate. And I like to sort of look at this under this kind of strapline of kindness in another's troubles, courage in one's own. And it might sound a little bit of a strange topic to be talking about with regards to trading. But I can assure you, ladies and gentlemen, giving a little bit of time or a little bit of money out of your trading profits to causes that you believe in, and we all have causes that are important to ourselves, I guarantee that it will actually help improve your trading, because you'll be in that happy space, okay? And remember, that's where profits come from. Another element you can do, which might seem a bit strange, is about blogging. All right, write about your trading. Okay, sit down, write about your trading, write about it, the good, the bad, and the ugly. Why would we do that? Why would we be interested in doing something like that? Well, once again, ladies and gentlemen, it adds to that process. Okay, it gives us a process to follow. It gives us routine. It gives us all of these things that start helping develop good trading habits, good trading behaviors. It also causes us to reflect, okay? Reflect upon our trades, reflect upon our engagement with markets, reflect upon who we are ourselves. And all of that will actually help in terms of guiding our own learning, all right? Guiding our own learning, it forces us to look and raises our self-awareness about who we are as people and who we are as traders. Also, so it's important, it's part of the journaling process, okay? It should be part of your journaling process. You should already be journaling as part of your trading endeavors, sort of just, as we talked about earlier, and sort of some of the 6 steps or the 10 steps of your tactical trading plan, okay? We looked at, step 7 and 8, which is about recording and reviewing. Okay, and it's effectively a case of having that journal is important to do that. And also it gives you a little bit of kind of a benchmark for your own progress. Trading, it's a day in, day out activity. You work at it, you work at it, you work at it, you work at it. And sometimes, we sort of just judge our success by our P&L, which is not always the smartest way. By being able to look back at your blog posts, you're in a position to sort of just see how far you've come as a trader. And it is an enormously beneficial opportunity to improve yourself as a trader. And I've actually just put a link in there for one of my old clients, a chap called George, a trader in London. And he started doing that a few years, and it helped improve his trading, and it has opened all sorts of opportunities for him as a trader. So you can have a little read of that about the benefits of blogging as a trader on his own particular blog. One of the other things you can do to help managing self is about educating others. Now, there might be some people who say, well, Paul, I'm only new to trading. I don't really know enough. Or there might be other people who say, Paul, I don't actually particularly want to work for a trading education firm. And you're absolutely fine on both instances. This is not necessarily about you joining a trading education firm. It's not necessarily about you selling education products. What it is about is that it's like that old Japanese saying that you never learn until you teach. All right, you never learn until you teach. By teaching others, you're forced to clarify your understanding of the 4 M's of trading. What you'll realize is that you think you have a grasp of those 4 M's of trading. You think you kind of understand them. You've heard it before. It's it's easy to do. But actually, by having to teach someone, by actually having to whether it be stand up or whether write it down, it forces you to clarify your understanding of the 4 M's of trading, which is unbelievably important and valuable for you. It will also show up areas that you are presently weak in, ladies and gentlemen, or it'll actually show you where you've got blind spots. What it also does is it helps build your self-belief. What does I mean by that? Well, by actually standing up and having to talk about trading, by actually educate and show people, it just reminds you yourself that actually you have learned so much, that you have come so far on this journey to being a trader. And it will also hold you to very high standards within yourself. And that in itself is a wonderful byproduct of helping others, that it holds you to high standards within yourself. It can also provide a social outlet. As I said, remember, it's a rather lonesome endeavor, and it allows you to sort of see other people. And it forces you to continue to learn, all right? When it forces you to continue to learn, which, as traders, even myself included, we are all still learning, okay? The moment you think there's nothing left to learn about trading is probably about the moment you're just about to take your next big drawdown, all right? We always continue to learn. And what you find there is, when someone is observing you and learning from you, you'll also be on your best behavior, ladies and gentlemen, because, as I said, it's holding you to high standards, all right? It forces you to be on your best behavior. And all of these are things are actually wonderful traits to have in your trading. So we've covered quite a bit there, but in terms of managing self, one of the other elements we can talk about is building resilience, right? Building resilience. And as I put there in the little on the sort of commentary there, in the military, in special forces training, all right, you'll find the army, the military, it exposes candidates to the most harrowing physical conditions possible. Once candidates have completed their training, they have deep conviction that they can handle all battle conditions. And it's the same for a trader. Once a trader's completed their kind of learning curve, well then they'll have deep conviction that they can handle all trading conditions. So what I sort of say to people is that your losing trades and your losing periods, they are your trials by fire that build resilience and build confidence. Right? Instead of seeing that as just as a losing trade, okay, and using it to define your own self-worth, think of it as it's your trial by fire. It's helping you build resilience. It's helping you build that confidence within yourself. Because once you have come through that and come out of the other side of it, well, you realize you can handle all trading conditions. So develop a plan for losing. Think about how can you turn crisis into opportunity. It's a great question for life. How can you turn crisis into opportunity? And we've got there's a little comment there. It's a childhood book in the UK, the Mr. Men books, and I'll put that up there because it's about Mr. Wrong. Okay, and what that actually means is, as a trader, being comfortable with being wrong is okay. In fact, it's a good trait. As a trader, you're going to be wrong. Okay, you're going to be wrong. You can find good traders can call the direction of the market right, but their trade may fail because they were washed out or they picked the wrong time to get in. It will be part of your experience. It's okay to be wrong, so long as you have, made sure that you've followed the risk management protocols we talked about in earlier sessions. Don't think of it as just, as a losing trade. It's merely a business expense that is going to help you learn more about markets, about method, about money management, and about yourself. Right? You're losing trades, okay? The trial by fire that builds your own resilience, and it also builds your own self-confidence. All right? It's very, very important. So, in terms of doing that, how can we actually do that? Okay, what can we do? How can we, help ourselves in that particular instance? Well, what we talk about is, in terms of building resilience, what I talk about is focusing on the quality of your decisions rather than the outcome of your decisions. Right? Very often, and all traders have it. We have an outcome bias. Okay, we judge our success as traders, our performance as traders, on the outcome of the trade, whether that trade was a winner or a loser. And so we have that outcome bias that, we use it to judge ourselves, sometimes very harshly, sometimes, not critically enough. And what I'm trying to get across to traders is that it's more important to focus on the quality of the decisions before the trade has triggered. All right. Why is that? Why would I be focusing more on what you do before the trade is triggered rather than what happens afterwards? The reason is that once a trade is triggered, anything can happen in the market. All right, that's what you have to sort of take on board as one of your own inner beliefs. Once a trade is triggered, anything can happen in the market. We've seen plenty of it, in the present, in our modern lifestyle at the moment. Okay, you can have a trade on the Dow Jones, let's say, for example, and then next moment, you might be long the Dow Jones, and it's a beautiful setup, a beautiful trade, and then the next moment, Mr. Trump comes out and puts out a tweet about the markets, and the markets sell off there absolutely drastically, and your trade is taken out at the stop loss. Initially, you're sort of, you might be hard on yourself, you might be upset, you might be saying, well, how can I do this? Why, how can I sort of beat that, etc. But it's actually about recognizing, if you had a good plan beforehand, which is what we talked about earlier, you have planned your trade, traded your plan, and managed your risk, then the outcome of that trade is a success, regardless of actually what it delivers. Because anything can happen. Mr. Trump can tweet. You might be a trader on pound sterling, and then right at this moment, Mrs. May comes out and says something about Brexit or something about her own political future, and then of course sterling goes haywire for the next couple of hours, and your trade is taken out at its stop loss. And once again, that's just a case of recognizing that anything can happen. Right? Anything can happen once a trade has triggered. So you have to focus on the quality of your decisions prior to that trade being triggered. That is key, ladies and gentlemen. Now, it's very easy. I appreciate it's very easy to say, and sometimes it's difficult to do. But I assure you that by switching your focus towards did I plan my trade? Did I trade my plan? Did I manage my risk? That will have a bigger impact upon you long term, positively, rather than just effectively basing your success on the outcome of your trades. Everybody likes winning trades. Nobody likes losing trades. But losing trades are part of being a trader. And as I just said on the slide before, it's about being comfortable, getting comfortable with being wrong. That's okay. so long as you have managed your risk. That's what's important. So, it's a case of focusing on the quality of your decisions prior to that trade being triggered. That is what will help you much more than anything else. And here's a great quote by an American trading coach, Brett Steenbarger. Self-confidence is not expecting the best. It's knowing deep inside that you can handle the worst. And that's absolutely right. Absolutely, yeah, absolutely spot on there, okay? And all the good traders that I've worked with over the years, they are self-confident, but in a very humble way, and it's knowing that deep inside that they can handle whatever the market throws at them because they judge their success on, the quality of their decisions prior to the trade being triggered, more so than actually what the trade delivered. And it is about planning trade, trading the plan, managing the risk. Those three things are all things that you can do, all three things that are in your control, all three things that you can do before that trade triggers, and then you let the trade play out. Okay? Anything can happen once a trade is triggered. Absolutely anything can happen. So, in terms of all these elements of preparing for our trading day, we talked about why do we do it, right? What's so important? Well, it's clear. It's part of the process, okay? It's part of the process that we want to develop as traders. It drives us to be disciplined, all right? And discipline is an interesting conversation, in itself, and that's that'll be the subject of webinars in the future. But what I can tell you is that it's a little bit easier to be disciplined when you have a good process to follow. Okay, it's almost like checking off that checklist. All right, it's easy to be disciplined when you have a good process. It forces us to be still. What does that actually mean? Well, it forces us to actually be in that moment, to actually connect with what we're doing, connect with ourselves, forces us to be still, and forces us to sort of forget about all the kind of rubbish that is going on in our lives. And we all have it, okay? We all have it. We all have our own challenges, etc. But by having a process, being disciplined, it forces us to be still and focus on what's in front of us. So it forces us to reflect on ourselves, and that helps us build self-awareness. And I assure you, process, discipline, and self-awareness, they are three key traits that keep coming back, okay, time and time and time again, in terms of what we see in very, very good traders. So my one of my contacts, she helps run a company that basically does trader analytics. She works with fund managers in New York that they manage funds of about $10 billion. Okay, so really big funds. You might think that they are wonders, superstars, they're rock stars, or they're absolutely stunning traders, and in many ways they are. But the reason they are really good traders and able to sort of trade, really large funds is because they have a process, they are disciplined, and they have great self-awareness. So, I'm telling you this is because this is what really the superstars do. This is what rock star traders do. This is what really great traders do. They have a process, they're disciplined, and they're always working on building self-awareness because those three things constantly come up time and time again in what we see in really, really good traders. So there you go, ladies and gentlemen. We just had a little bit there to carry us through and looking at how we can manage ourselves as traders and what we can do to sort of build resilience, build confidence, build self-belief around our trading business. As always, what we've talked about here on the Mastering the Four M's of Trading is just having a good series of instruments to look at. Okay, we did earlier on in the sessions we looked at how we set up profiles, and you can find that in the as I said, the YouTube channel and the Admiral Markets Global Facebook page. And we can see there we're looking at 28 major pairs, but plus the dollar index. We've touched upon how we want to have our watch list part of indices, things like the S&P, the Dow, the Nasdaq, FTSE, the DAX, the Nikkei. Commodities, okay, we've got the hard commodities: oil, gold and silver, palladium, natural gas and platinum. Equities, okay, Admiral Markets, I have the opportunity to trade some of the FANGs: Facebook, Amazon, Apple, Netflix and Google, and also some of our personal favorites. And maybe we'll have a little look at that just to finish off the last few moments of our session today. And as also, you can have profiles for cryptocurrencies as well. So there's plenty of instruments there for us to look at, okay? We don't need to trade all of them every day. And what you'll actually find is that, as you trade them, you'll find that, elements of it will resonate with you. And, it becomes easier to identify which are your best trading instruments if you're keeping good records, if you're doing good reviews of your own trading. And all of that is part of building that performance mindset, which is what we said right at the very beginning, ladies and gentlemen. So if you remember, just to for our last couple of slides, I always like to just quickly go over it, all right, just to quickly just reinforce it for new traders, all right? Mastering 4 M's of trading. Step 1, define levels of support resistance. Step 2, define if there's a trend. Step 3, see how price reacts at key support and resistance levels. Step 4, when there, look for particular price action signals at those levels. Step 5, just be aware, are they part of a bigger chart pattern? Step 6, risk. Always define your risk, accept it, and stick to it. Step 7, reward, okay? Are we using targets or are we using a trailing stop? Know your exit before you enter the trade. Step 8, record, okay? Make sure you keep scrupulous records. We've just touched upon that again. Step 9, review. Improve your performance by debriefing your trades, okay? All of those will help you raise your self-awareness, and that's one of those 3 traits we want to see in good traders. Step 10, repeat, okay? Consistency and discipline are key. And as I say every week, it's easy to be consistent if you're disciplined. It's easy to be disciplined if you're consistent, all right? And processes and checklists will help you all with that. So remember, open any chart where we're going to make a trade on. First thing we do, define levels of support resistance. We look at monthly, weekly, and daily charts, draw in horizontal levels of support resistance, and we can also use psychological round numbers, okay? Things like 120, 140, okay? Sterling was at 130, it's dropped through that, okay? So we'll be looking at the next level. 111 has been interesting in euro dollar. 111 has been interesting in dollar yen. So just understand, where those psychological round numbers turn up as well. Step 2, define if there's a trend, okay? I keep saying this every week. A good trend leaps off the chart at you, okay? If you're not sure if there's a trend in place, I'll tell you, there isn't a trend in place. It is, keep it simple. Understand when a chart, understand the market environment, that 4M, all right? Market environment. Is the market consolidating or is it in a nice uptrend, okay? That's it. As I said, it'll leap off the chart at you. See how price reacts at key levels, okay? We don't want to be doing our business in between levels. We want to be doing our levels at those extremes, at those particular levels. And what in particular we're looking for is a confluence of events to happen at those key levels. And that's where we start to look at particular price action setups, which was step 4. And we covered all those sort of different price action signals and setups. We covered an awful lot there. They are all in the archive of the Mastering the 4Ms of Trading webinar series. So by all means, go back and see them and get yourself get your hands on those setups. I know that everybody loves a setup to look at. And as I said, step 5, just be aware, is it part of a bigger chart pattern, okay? Is it a continuation pattern like bull and bear flags, or ascending, descending triangles, or even symmetrical triangles? Whereas a reversal, head and shoulders, double top and bottoms, triple top and bottoms, or a cup and handle formation. So there you go, ladies and gentlemen, okay? Always a big picture. Remember to manage, keep on top of those 4 M's of trading, okay? Understand the markets you're trading, okay, and what environment they're in. Make sure you know what method is the best for you and that you're using it in the right market environment. No use using a range-bound method if the market is trending. Always be on top of your money management, okay? Always be on top of it. And as we've gone through for most today, recognize about the importance of managing myself, all right? Profits come from happiness, not the other way around. That's a key takeaway. And just make sure, are they all in alignment? If they are, fantastic. Do what you can to make sure they stay. If they're not, well, then work out where in which those 4 M's are you struggling with. As I said, constantly monitor those 4 areas and work at them all you can, because that is what will help develop you as a trader. As always, if you have any questions about this or any of the rest of the series, then you can contact us here. We've got the London number 02035 140 756. Drop us an email at hello@admiralmarkets.com. You can look at us on the YouTube channel, youtube.com/admiralmarkets, or facebook.com/admiralmarketsglobal. I hope you found that useful and interesting, ladies and gentlemen. There's lots in there to take away, lots in there that you can take away and utilize in your own trading from tomorrow in an effort to help you manage yourself. And I know that the best traders who watch this will take all of that on board, and they will build that into their trading processes so they can be disciplined and therefore help raise their self-awareness as a trader. As always, I wish you the very best of success in your own trading, and I look forward to speaking to you in our next session of Mastering the 4 M's of Trading. Trade well, ladies and gentlemen.